Welcome to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Judd, how are you today?
I'm doing great. Very blessed to be here with you guys today.
Very blessed to be here with both of you as well. Stewart, how are you?
Doing amazing here. Just trying to make it through the summer here.
I know, because it gets quite warm. It's a little toasty. So we're very thankful for air conditioning, of course. But everything has been so busy for both of you. So thank you so much for always taking the time to come in and do the shows each week. I know the viewers at home really appreciate it. And I think this morning we should start out by talking about what's happening in the stock market. Stewart, what are you seeing right now?
Well, as you know, Cynthia, I mean, we're at all-time highs in the market right now. We're seeing tons of volatility out there. We're seeing interest rates all over the place as well. So a lot of times people have hidden inside the bond market to insulate themselves from the stock market. And just right now, we're not seeing that kind of protection there as well. So there's a lot of risks out there that people need to be aware of.
Judd, what about you? A lot of questions about what's going to happen if things start to decrease or stabilize, if you will, because we've been on such a run for so long.
Yeah, I think what happens is people have a very short memory. 2008 happened and it devastated a lot of people. People were scared. But as time goes on and the markets continue to go up, then people tend to forget about that. And you think it's never going to end. And now you're looking at retirement, or you're 3 to 5 years away, or you're paying for college for your kids. And then all of a sudden you see this volatility and you start to realize that, hey, maybe this party's not going to go on forever.
Absolutely. We should also talk today a little bit about the Secure Act. Any changes with that, Stewart?
Well, yeah, so the Secure Act actually had a lot of initial promise to begin with. Back in December of 2019, actually November of 19, we were back in Washington, D.C., meeting with the staffs of both of our senators at the time and a few of our Congress people, and we were really trying to get this pushed forward. Now, what the Secure Act did, or what it was intended to do, was basically to delay required minimum distributions. It added some protections, some ERISA protections inside of there, and it added some annuity options for your retirement plan as well. But what we got, it wasn't the full package we were hoping for. It did allow you to delay your required minimum distributions from 70.5 to 72. But in exchange, the Democrats on the other side wanted to make sure that people were taking faster payouts once they pass. So the stretch IRA at this point is dead. And so it's really important for those people that have planned to stretch it out over generations for the next generation to be able to take over their lifetime. That's no longer available. Now they have to take it out over 10 years if they're a non-spouse beneficiary. So it's super important to make sure you have a plan that really plans out the tax implications of your accounts.
Sure, that makes sense. And Judd, I want to ask you as well about the Strong Retirement Act of 2021.
Yeah, so what's happened is at this point, they're looking to put together and do a revision of the Secure Act 2.0.
Okay.
And a couple of the big things there, they're talking about moving required minimum distributions back from 72 to age 75. They're talking about increasing contribution limits that people can have along the way for some high net worth individuals where maybe they're going to have to take those required minimum distributions, but they don't need the money. They're increasing some of the provisions that are available through what's called a QLAC, a qualified lifetime annuity contract that lets them delay when they take those funds out. And again, part of the reason that we share this is, again, not to impress people with all of this vast knowledge that we have, but is to really impress upon them that if you're working with an advisor and they don't watch these things, if they're not keeping you abreast of the stuff that goes on that's out there, these are all things that in the end are going to affect your retirement, your net worth, your legacy.
Sure, that makes perfect sense. Stewart, I should ask you, if people in the viewing audience are wondering, they're currently working with someone, how important is it to have a second opinion from a fresh set of eyes?
Yeah, Cynthia, I think it's tremendously important to make sure, if you've been with an advisor for a long time, of course you like them. I'm sure they've been very attentive. But at the end of the day, we have a tax office at our office for one reason and one reason only. I kind of feel like for the first decade of my career, I was faking it, and once we created the tax office about a decade ago, we really got to see some deeper insights into what was going on tax-wise. So the reason it's important to have a second opinion, and we do that at no cost, it's complimentary for our clients, but it's super important to get a second opinion because you need a fresh set of eyes every once in a while when it comes to these portfolios. And you need to understand what kind of risks are you taking, what kind of fees are you paying, and what kind of tax implications are hiding down the road there.
Absolutely. Judd, are people often surprised when they come in to have a second opinion that you and Stewart are uncovering things that they had no idea was even in their portfolio, if you will?
Yeah, absolutely. So, a number of the things that we see, especially right now, I mentioned people having that short memory, is they've got more risk inside their portfolio than they're looking for, which, on one hand, they've done great. The markets have gone up. As Warren Buffett always says, a rising tide lifts all ships. Yeah. So if you're taking that extra risk and the markets are going up, you're making very good returns. However, when we start to look back at, what happened even during the COVID drop, when we look back at, December of 18 and even 2008, and you can see where your portfolio would be at that point, a lot of people say, whoa, well, I'm comfortable, I'm happy where I'm at. I don't know that I want to start over again if we get one of those drops. The other big thing would be the fees. A lot of people, again, they see their account go up, so maybe they're not paying attention to what fees are being charged inside there. Sure. But again, we want people to see what you're paying, what your real returns are, and how you're doing with your assets compared to similar assets or asset class that are other investments that are out there, just so you have that apples to apples comparison.
Absolutely. Stewart, I know that you and Judd have a special offer to give to the viewers at home today. Let's talk a little bit about that and then open up the phone lines.
Sure. What we're offering to the first 10 callers that call today is a complimentary portfolio review. And in that portfolio review, what we're going to do is we are going to take a look at the risks that you're taking. We're going to take a look at the fees that you're paying. And we'll also talk about some tax implications that may concern us out there. So it's really important for you to get up off that couch, pick up the phone, give us a call at 833-652-7829, and we'd be glad to give you a second opinion. And there's no strings attached.
Stewart, thank you so much. Judd, thank you so much. To the viewers at home, the phone lines are now open. That number to call is 833-652-7829. As Stewart has mentioned, it never hurts to have a second opinion from a fresh set of eyes. Let these gentlemen take a look at where you currently are on your path for retirement. Does it need to be tweaked or adjusted? You're being offered a complimentary consultation today just by calling in. That number is 833-652-7829. We have to take a very short commercial break, but don't go anywhere. We have so much more when we return.
What happens oftentimes is we'll run into clients or potential clients that have saved all this money, but they're 75, 80 years old. They've got this big pile of money, but they're not enjoying retirement because they're so worried about running out of money that they never actually get to enjoy their life's work. And so to me, it's really rewarding to be able to create a plan so that these people can have a great time in retirement, knowing that they're not going to run out, that they're going to be fine. I think it brings a smile to their face.
We get a lot of different people at a lot of different stages in their lives. And what we're able to do is, for some folks, it's able to tell them that you're on track. Keep doing what you're doing. And 15 years from now, you'll be retired and enjoying life the way you want it to be. For some people, it's people coming in and they're 3 to 5 years away from retirement, and you're able to tell them that, 5 years, 3 years tomorrow, you're ready to go.
We are a complete shop. We handle estate planning, taxes, financial planning. We do a really in-depth cash flow analysis that is way more detailed than you'll see in the market.
Everything all in one spot, with the left hand always knowing what the right hand's doing. Because it's not just about the investments, but how's that going to affect your taxes? It's not
where are you going to be 5 years from now, 15 years from now? And it's that back and forth full view of what the clients, not only today, but tomorrow and their legacy down the road is going to be, that really sets us apart.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They are the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today, talking about what's happening in the stock market, talking about what's happening with the Secure Act, talking about planning for retirement overall. So, Stewart, I should ask you right off the bat, what is the perfect age for someone to start getting advice when they're planning for the years ahead?
Right. So for us, we want to say, first of all, get advice as early as possible. Now, where we can really help people is if you're between the ages of 58 and 62 years old. I know that's a narrow window there, but that's really where we see a lot of people are just, they're about to retire, or they just retired, and they're completely flying blind here. But there's a lot of options that open up for you when you turn 59 and a half. For example, a lot of people have these big 401ks. They've been very diligent about putting all this money away. But Cynthia, what happens is they just don't know what to do. So they put it into a money market account, or they put it in these target funds. And, there's some risk associated with those kind of funds. And at 59 and a half, most plans, most 401ks, 457s, even thrift savings plans, if you're a federal employee, will allow you the ability to roll that over into an IRA. And what is the value of that? Well, it allows you to have access to some of the best money managers on the planet. It also allows you to start looking at tax options too, like Roth conversion, for example. There are some downsides, some protection downside, ERISA protection downsides. In Arizona, it's not as big of a deal as it is in like California and so forth. Borrowing provisions change and so forth. But it's really important to take a look, get a second opinion. These clients feel lost sometimes where they're managing these assets and they're saying, hey, they know that we're closer to the end of this market than we are to the beginning. And I'm going to show you a graphic here on the screen. And this is just the S&P 500. And what this graphic's going to show you is we are on this massive peak in the market right now, right? And, if you take a look at those two other drops that are shown there in 2000 and 2008, those were 50% plus drops. And so are you comfortable losing that kind of money in today's market? Because listen, I have no clue where the market's going specifically, right? Sure. That's why we have these money managers that are really good at following that. But I'll tell you this, it's really important to make sure that you have a truly diversified portfolio.
Absolutely. Judd, I should ask you, what are the steps that you follow when someone is becoming a client? Let's talk about what that process looks like.
Yeah, absolutely. As Stewart mentions lots of times, we're not a fit for everybody, and not everybody needs our services. But what we want to do is work with those people who want our help, who need our help, and can benefit from our expertise. So the first part is just coming in and really getting to know each other. Kind of like an interview. Are they interested in our services? And, are we interested in being able to help them? But the steps from there will be, we sit down, we do comprehensive planning, we do some cash flow analysis that we'll talk about later. But the reality is, we want to let you know where you are, how you're doing compared to other, again, investment classes in that area, what rate of return you need. Stewart just mentioned that. Are you prepared for a 50% loss in the market? And if you don't need to be taking that kind of risk to live a happy retirement, never run out of money, then it's one thing if you're greedy and you want to make that money, then take the risk. But if you don't need to take that risk, know where you need to be, know where you need to be tax-wise, and we will help walk through all those steps. So when someone leaves our office, and again, it might take 2 or 3 appointments to do that, but they have a plan, they know where they are, they know where they should be, and hopefully, we get to be the ones to help them implement that.
Sure, absolutely. Stewart, I should ask you, what makes Asset Preservation Tax and Retirement Services special and different from other brokers, if you will, advisors?
Well, Cynthia, the one thing that is very clear about what we do that's different is, first of all, we're fiduciaries, and that is super important. Whether you deal with us or somebody down the road, you want to make sure, number one, that they are a fiduciary, that they don't have any undisclosed conflicts of interest when managing your assets. That's number one. Number two, we have a tax office, and I'd mentioned that at the beginning of the show, but the purpose of our tax office, even though we did, I don't know, 729 tax returns or so far this year, it's not about tax preparation. It's about tax planning, right? And if you can't have that conversation with your advisor about taxes, because sometimes when you're at one of these big box shops, what they'll do is they'll say, hey, you know what, go talk to your CPA. Then your CPA says, I don't know, go talk to your financial advisor. And then those conversations never happen. And so, like Judd says, the right hand doesn't know what the left hand's doing, and no plans ever get done. Listen, we are in a very high tax environment moving forward here. We know that things are changing. Currently, we are in the most efficient tax window in history, and we know change is in the air, right? Whether it's through budget reconciliation, which we believe is going to happen, or not, it's really important to have a plan, because even worst case scenario, the current tax laws are set to sunset in 2026. So it's important to have a plan before that time.
Sure, and I love how you mentioned it's different for tax preparation, tax planning, two totally different vehicles. And people have a lot of questions about how to plan properly for taxes in the years to come, Stewart and Judd, because obviously we all feel taxes are going to go up in the future. So having that protective umbrella is so important. Absolutely. And Judd, I want to ask you about, how do you do a cash flow analysis? Let's talk a little bit about that.
Yeah, so what we do when we put together the cash flow analysis, we're going to look at your current income, your future income, your expenses. We want to build in there the wants, the needs, legacy planning, everything that's going to be there for the next 20, 30, 40 years. And then what we like to do is we'll go through and make sure that we dumb down rates of return, we dumb down income. We want to, be very conservative on things that will benefit the clients going forward. However, when it comes to expenses and wants and all those things, we will run at a higher than expected inflationary rate. We will compound that each and every year. We will dumb down their COLA adjustments. Again, anything that could benefit them, we want to be conservative. Anything that could hurt them, we want to bump that up. And by running that analysis, we can tell them where they're going to run out of money, what rate of return they need to receive. We're going to tell them where their taxes are. So are there ways that we can save you some taxes now versus later? It can help people choose when to take Social Security versus waiting to take those required minimum distributions. And then it will also lead into Roth conversion planning, which I know Stewart will talk about here later on in the show.
Sure, absolutely. So Judd mentioned the COLA adjustment. Let's talk a little bit about what that is, Stewart. What does that mean to the viewers at home?
Right,
COLA.
so the cost of living adjustment that he adds to our cash flow analysis is just basically to let you know, we're seeing some pretty substantial inflation. I mean, some numbers are saying 5% right now. So a cost of living adjustment, and you'll see it every year in your Social Security, for example. And what that is, it takes a look at the cost of goods going up over time. And so if you have $1 today and you don't invest it, and it's still $1 10 years from now, well, you can buy less with that $1 10 years from now than you can buy now. And that's inflation. So it's really important to consider what is the value of your money over time as well.
Thank you, Stewart. Judd, I know that you and Stewart have a special offer to deliver to the viewers at home today. Let's talk a little bit about what that is and then reopen the phone lines.
Wonderful. Well, for the first 10 callers today who call us at 833-652-7829, we'd like to offer you a complimentary portfolio review, analysis, cash flow planning. We want you guys to leave your checkbooks at home, come in, sit down, spend an hour with us, see if there are some things where we can help you improve on. We always talk about it. If you're in a great spot, we will let you know that. If there are things that need to be adjusted or tweaked, we're happy to give some advice on that, and certainly, again, willing to move forward if someone needs our services. But again, first 10 callers, 833-652-7829. We look forward to seeing you at one of our offices. We've got our Sun City West Valley office, the Scottsdale office, and the East Valley Tempe office as well. So we want to make it convenient for you. Again, no cost, no obligation. Look forward to seeing you at the office.
I love that. All 3 locations. That's amazing. You just keep growing. Such a blessing. To the viewers at home, the phone number to call is on your screen, and that number is 833-652-7829. We know you have a lot of questions about how to plan properly for retirement. Stewart and Judd are offering you the opportunity to come in for a complimentary consultation. All you have to do is pick up the phone and call 833-652-7829. We have to take a very short commercial break, but when we come back, we're going to talk about Roth conversions. So please stay tuned.
This is the story of how you get from here to there. Right now you're here, but in the future, you want to be there. And from here, there looks pretty good. But so few get to there. Why? Well, of those who do make it, some will have luck, but most will have a strategy. They will save and invest, grow and protect, and they will work with advisors who will help guide their way. If you're looking to get somewhere, to get there, we know how to set a course. It's what we do, and we do it well. We're investment specialists, retirement advisors, insurance experts, and financial planners. We have innovative wealth tracking tools to monitor your progress every step of the way. Wherever you are now, we can help you get to where you want to be. The road between here to there is shorter for those who know the way.
And welcome back to the Asset Preservation Hour. My name is Cynthia DeFazio. I'm joined today by Stewart Willis and Judd Carlson. They're the co-founders of Asset Preservation Tax and Retirement Services. Gentlemen, a great show that we're having today, obviously talking about such important topics when it comes to planning for retirement. One thing I'd like to spend some time talking about in the final segment today, Roth conversions. Stewart, why are those something that should be considered to be usable in retirement, if you will?
Well, Cynthia, like I said in the last segment, we are in a very low tax environment right now. And most people believe that next year taxes will be higher. Now, is that for sure? Absolutely not. But what Roth does, it essentially, you can contribute to a Roth, but a lot of our clients that are higher income individuals are not even eligible because of phase out. So they can't even contribute to a Roth. However, they're allowed to convert to Roth from their existing 401ks, IRAs, TSPs, etc. So you want to take a look at the option, because oftentimes when you look at an entire portfolio, and inside your portfolio, I'm not just talking about your investments, I'm also talking about your Social Security benefit. You know, for most couples, you're going to see between $1 million and $1.4 million of benefits if you live to normal mortality. And if you're not planning the taxation on that, it's a problem. Well, remember, Social Security was never meant to be taxed. But when you start taking those required minimum distributions or income distributions when you're retired, that actually contributes to the taxation of Social Security. That just doesn't have to happen. So there's a lot of choices, and Roth is one of those tools that we use. Judd does a lot of our really in-depth Roth and cash flow analysis, and the modeling he does is pretty incredible.
All right. Let's talk a little bit more in depth about that. I know you have such a passion for helping people plan properly for retirement, if you will, and also just taxes overall. So let's talk a little bit more about that process, Judd.
Yeah, so again, what we're all about, and part of the reason that we look out so far into the future, is that we don't want to set you up where you've got plenty of money to live on today and you're paying low taxes, and then 5 years from now, you have to take those required minimum distributions, and all of a sudden you're paying a higher tax bracket. Something happens to you or your spouse, now you're a single tax filer, you still have to take that money out of those required minimum distributions. So again, for us, it all comes back to, it's not necessarily how much you're making, it's how much you get to keep. And so again, taxes and inflation are something to keep an eye on.
Sure.
I had a client recently where the Roth conversion came in and was very helpful, and it was a unique situation where he does have about $500,000 in an IRA, so a pretty substantial amount there, but they have 3 adult kids, and one of their children is, he's autistic. So they have, he wants all of the kids to each get 1/3 of what they have, but because of that situation and the benefits the son receives, he has what's called a special needs trust. Well, what would happen down the road is the son can't receive that money directly from the IRA because, of course, that would disqualify him from his benefits. If you have that money pay out from the IRA to that trust, it would all be taxable in 1 year, which then a bunch of it's getting eroded to taxes. So what we put together for him is the ability to do Roth conversions, which will allow that money to be tax-free. It will be there for his son when he needs it. There won't be a big tax bill associated with it, and it won't disqualify him from his benefits. And he had done a lot of analysis himself ahead of time. He was trying to stay under the 12% tax bracket, and we showed him how even jumping into the 22% rate for a couple of years would save a substantial amount of taxes over the next 10, 15 years. So, you know, again, always good to get that second opinion.
Absolutely. Stewart, what does it feel like when someone comes into the office for the very first time? What can they expect to experience?
Well, first and foremost, they're going to see either Judd or I. So they're going to see one of the partners here. And I think oftentimes people are surprised, like, oh my gosh, we're actually seeing you guys. Yeah, we're not, you know, pawning you off on some other advisor. And, you know, quite honestly, I jokingly say, if you don't like me on the show, you're not going to like me in person. Just call Judd, because I am exactly the same person in person that I am on this show. And I think it's really important, you know, to make sure that you're doing business with somebody, A, that you trust, and B, that you like, because we want these to be long-term relationships. We don't have a lot of people that come in and leave. You know, we don't see a lot of fall off on our clients. It's very, very low, because we try to vet that out at the beginning of the relationship before we even start one.
And Judd, how often can clients expect to hear from you and Stewart?
Well, you know, you're going to end up hearing from us, number one, as much as you want, and number two, maybe more than you probably want. One of the things that we do is we always want people to understand that when we come in and we build that plan, we want to manage those expectations. So if we're looking to make 5% rate of return based on where you're at and your risk, we want to be able to show you how we're comparing with the S&P 500. We want to make sure that we're on track for those taxes. We also plan a number of social events with our clients where we get a chance to meet them, meet their families, do things where it's not all about business, but it does continue to create those opportunities where we can find out if something's changing in their lives. So quarterly reviews would certainly be standard. Tax clients that we work with, we're going to see them during tax season. We're going to see them at the end of the year if we've got anything going on there. So, and again, because we are fiduciaries and we do everything under that assets under management scenario, it's not like you're getting billed for every time you come in to see us. So, you know, our door's always open.
And I love that, because you're putting their needs above anything else, and clients know that, and they resonate so well with the two of you. Gentlemen, thank you for such an amazing show again this week. I can't believe we're almost to the end. It goes by so fast. To the viewers at home, most importantly, thank you for spending time with us this week. That number to call once again is 833-652-7829. If you're not on the right road for retirement, wouldn't you want to know today? What Stewart and Judd are offering you is a complimentary consultation. All you have to do is pick up the phone and call 833-652-7829. Be safe, be happy, be blessed, and we look forward to seeing you back here 1 week from today.